Now, a combined 1.3 trillion naira worth of OMO and treasury bills maturities are expected in Nigeria's fixed income and FX markets this month. Now, to discuss what to expect for the market in February is Victor Aluyi, is the head of portfolio management at Comercio Partners. Thank you so much for your time today, Victor. But before we get into the market, I just want you to comment on the interview there with Roger and what deals like that and means for Nigeria's renewed drive for gas.
I think it's essentially perfectly aligns with the, the Nigerian gas master plan. Seplat has been one of the major indigenous oil and gas operators that have been at the forefront of, developing gas fields. And I think that our project is quite significant. 300 million standard cubic feet of gas. I think that's quite significant. And I think that it would go a long way in properly channeling and tapping the nation's abundant gas resources.
All right, Victor, let's get back into the market now and let's get your outlook for the fixed income market for the month of February.
Well, I think, the month of January, for instance, has been a, generally bearish month, for the market. Yields are generally up across the curve. At the short end of the curve, yields are up about 90 basis points. At the midpoint, about 170 basis points. While at the long end, you are seeing, yields rising by about 279 basis points. So clearly, the trend has been bearish. We had the first, bond auction of the year where the DMO offered about 150 billion. Had bid to cover ratio of about 1.9 times. Greater subscription at the 15-year paper, with the auction closing, 25-year closing at 8.95, the 15-year 8.74, and the 7-year 7.98. I think liquidity is going to play a major part, like you pointed out. So for January, we had about 1.46 trillion worth of liquidity coming from OMO maturities, from coupon payments, and all of that. In February, we're going to have 1.23 trillion. It is very instructive to compare this to what we had last year. Last year, January, we had about 2.53 trillion worth of liquidity. Last year, February, we had about 2.47 trillion. So you're having about a trillion less, of liquidity coming through. So clearly, that would have its, impacts, on the markets in February. We saw some sell-off, particularly by the PFAs because of that remittance to PENCOM. But it really remains to be seen how the market will shape up in February, because what we've seen in January is a case where we've seen, yields open up, yield opportunities sort of open up. So we're likely to see, some bargain hunting. However, that is most certainly going to be capped, by the significantly reduced liquidity, that we're expecting, in the month of February. So we're likely to see, the market sort of trade sideways and, balance out at some point during the month of February.
All right, but still looking at the funds in the market, let's look at the external reserves. We've seen the oil prices continue on that upward trajectory for a while now, and we'll see what it means for the external reserves in Nigeria. What's your outlook for that in Nigeria?
I think that the ascendancy in crude prices that we've seen over the last couple of months has gone a long way to support the external reserve position, and by extension, the currency. So crude oil has averaged about $55 over the last month, thereabouts, and that continues to provide, significant support to the external reserve position, to the nation's foreign position, as well as the currency situation. So a lot really depends on what happens to crude oil. If crude oil stays stable, at least over the next couple of months, say from the near to the midterm, I think it would, provide decent support for reserve accretion, whilst also ensuring that, the currency stays, somewhat stable. So clearly, all eyes on crude oil to monitor what exactly goes on there.
Now let's look at the amount of foreign portfolio investors we're seeing play in the markets now. We're seeing that for FPI investment dropped to a 4-year low. What do you think about this trend, and how do you think it's going to likely play out in the first quarter?
I think the trend is not far-fetched. I believe that a lot of foreign investors are, concerned about, the macro issues. Also, the yield environment. Clearly, we've had much more attractive yield environments in the past. So this is not our best yield environment. So clearly, the attraction is significantly reduced, coupled with the global challenge that's ongoing right now, and also the local homegrown issues. Recall that, the country is essentially in a recession, and we're looking to dig our way out of that. So all of this would act to, weigh on, investor sentiment at this time. But I think that, that should improve going forward as the macro situation improves, as the global situation also improves, and also as our yields begin to improve as well. I think we would see some, decent attraction of, foreign inflows. But suffice it to say that, you're seeing a lot of, local investors sort of pick up the slack, not certainly at the level where the foreign investors have done, but I think it's cheering news to see that, the local investors have been able to step in to sort of, bridge that gap, if you will.
All right, but let's get your expectations for the currency. We've seen that the Naira was pressured quite a while towards the end of last year. Are we going to see that trend continue in the first quarter?
Well, like I said earlier, I think that the movements in crude prices, or the rise in crude prices, would provide some support. The external vulnerabilities remain, but I think that in the near to the medium term, with the move that we're seeing in crude oil, that would continue to provide, some significant support for reserve accretion, and, by extension, provide more ammunition for the Apex Bank to be able to better manage, the currency situation. So I think that a lot, depends on, the trajectory for crude oil prices, really.
All right, but then let's look at inflation, because we see that it's still at very worrying levels right now with, headline inflation around 15.75%, and we're seeing food inflation get up just about 20% thereabout. What's your outlook for what inflation is going to be in this quarter?
I think that, the inflationary pressures that we've seen have gone, I'd say that it's gone beyond, monetary issues, really. We've had, significant supply side distortions that have led to, the uptick we've seen both in the food sub-index and also in the core, sub-index. But I think that one of the critical factors that would probably help, ease the inflationary pressure will be the fact that we're going into the harvest season. So we should have, more food crops out there that should, put that sort of downward pressure on the food sub-index and by extension, the headline number. Also, I think that the opening of the borders would also act to, reduce that inflationary pressure. So I think that, yes, we're likely to see some uptick in another month or two, but going into the medium term, I think we'll see that inflation number start to moderate.